Welcome to the January 29th, 2024 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. This week's program titled True, Not True. So we're going to play the game here and say, is there an AI supercycle? True or not true? Well, so far, yes, it is true. These are four candidates, and IBM this week, for example, spiked 10% in a single day. They were the original AI company with voice recognition and something they called Watson. It was kind of a dweeby name, and IBM had about 10 years in the desert, and they're at a 10-year high after this week, up 17% for the year. Supermicro computer. Remember, these are not recommendations for your portfolio, and they have price risk, but they are running like a banshee. Supermicro computer up 65% so far this year. Microsoft, and the original AI for Microsoft was you'd be typing something and it would guess that you misspelled, right? Now it'll help you with your grammar. It's up 7%. And Dell, Austin-based Dell Technologies, wow, actually Round Rock-based, they're up 10% for the year, and they've doubled in about a year, showing great results. So, from an investor standpoint, yes, there is an AI supercycle, increasing productivity, and some have likened the AI supercycle to the 90s. Remember, PCs were essentially invented in the 80s, nationwide adoption in the 90s led to huge gains in productivity, and it was an economic boom. That was the last time Harry Dent was bullish. He's been bearish ever since, and wrong. But anyway, I digress. Here we go. Real estate always goes up. True or not true? Well, this is Dallas. So, 20 city nationwide. This is basically the North Texas area. And you can see the price of homes. I'm going to get to wages in just a second, because part of the questions that we asked this week are, hey, are we better off now than 4 years ago, right? It's election year, so people always say that. Anyway, I'm Spencer McGowan, President, McGowanGroup Wealth Management, your financial weatherman. This is your weekly fast-paced tour of the global financial markets from the galactic headquarters of McGowanGroup Wealth Management, serving affluent families right here from the Crescent in Dallas. All right. And you can set your time for a Zoom call. You just go to NetWorthRadio.com, or you can come by, get your tour of the Texas Financial History Private Collection with lessons, time-proven lessons in the investing world. Now, this is the home price index. This is not the price, it's the price index. It started at 100. By 2019, it was 188. So the first 20 years goes up, homes went up 88%. Then we spike all the way to 307. So more than a 50% gain in the price of a home from 4 years ago. Keep that number in mind, 50% gain. Now, here we have about a 10% correction in home values here in DFW area. And we still haven't hit a new high, 294. So I was curious, what does the nationwide look like over the last 5 years? So it's not true that real estate always goes up. If you had a commercial office building, for example, that was worth $17 million, well, with occupancy down and cap rates up, that value might go from $17 million to $10 million. So in commercial real estate right now, prices are way down, and nationwide, homes are at a new record. You can see the spike here, about a 50% spike in prices. And now nationwide, home prices are at an all-time new high. Matter of fact, in Boston, there's a zip code in Boston, the average home, $2,663 per square foot. So if you want to live in that Tony Boston neighborhood and you want 3,000 square feet, which is about the size of most houses, well, it costs you $8 million. So you might want to start saving up. Here we go. All right. Now, this is the sentiment index. Are people happier than 4 years ago? Well, the happiness index is by University of Michigan. I don't know how they score this, but it was at 101 back in 2000, at the end of 2019. That's a lot of shiny, happy people. And then you had the COVID, right? Goes to just below where it is today. Wow, look at what happened here. The happiness index, there were only half as many shiny, happy people. It goes from 100 to 50, and that was the peak of inflation at 9%. And it spiked recently, so they asked me to explain why sentiment was spiking. I think a big part of it is inflation's gone from 9 to 3. Now, that's kind of like, you know, when you get a spanking as a kid, you're just glad when it's over. I think that's a big part of this spike in consumer sentiment. But notice there's 20% fewer happy people than there were in 2019, just saying. All right, wages. Are real wages up? True or not true? Okay, the white line is real wages adjusted for inflation. And you could see all the shiny, happy people at this big spike in wages. It's up about 10% here, then it comes down, and real wages actually hit a low consistent with the inflation. And if we said, well, you went from about 11 and you're just over 11 now, so real wages haven't really gone up that much, and the average hourly wages went from 27 bucks to 34. So that's roughly a 25% increase in wages over the 4 years, right? What's this? That's the price of a new car. Over that same time period, it's gone from 20 to 48. So your wages up 25%, and a new car is more than double. Just think about it. All right. Here we go with the S&P 500. We've got a little dichotomy going on with earnings. So this week, S&P 500 hit an all-time new high. Dow goes over 38,000, S&P at 4,900. If you were subscribed to this broadcast over a year ago, we brought you the forecast by Jim Leuthold, or by Leuthold Asset Management, that the Dow could hit 5,000. And one of the premises was that earnings would grow. So far, a third of the companies in the S&P 500 have reported earnings. And this is not good, right? Stocks are way up, but the real earnings of these companies is down 2% compared to last year. If that doesn't start to grow, well, you better raise some tactical safety. And for the rest of this year, now that the portfolios are back on track, record profits, we are going to start raising tactical safety to get ready for the next time that there's a correction. McGowanGroup Wealth Management, registered investment advisor, a fiduciary, and I have my money in those disciplines too. If you want to see what the portfolios look like, well, come down to the Crescent. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.